To discuss the rise of the rest, please welcome to the stage Edward Luce, U.S. National Editor of the Financial Times, and Steve Case, Chairman, CEO, and co-founder of Revolution, LLC.
Thank you, and oh, God, that's really loud. Steve, great pleasure to be here with you. You need no introduction. We've only got 15 minutes. AOL, I've got mail for you, et cetera, et cetera. Everybody knows your background, but there's just one I can't resist mentioning that you reminded me of, which is that you were born and raised in Hawaii, right, which explains some of your optimistic disposition, in the same Honolulu hospital that Barack Obama was born in. But you weren't asked to provide your birth certificate.
I was not. I also went to high school with them, which is a reminder you have to be nice to everybody in high school because you never quite know what's going to happen.
A very good moral to that story. We're going to get into your VC fund, The Rise of the Rest, in a second, but the premise of it is really interesting, which is that 3/4 of VC funding in America goes to Silicon Valley, New York, and Boston. And the rest, the other 95% of the country, has to make do with the crumbs, right, of which Chicago gets a lot, yeah, but it's still crumbs compared to those three. Why is money monopolized to that degree on a continental scale economy? How can it be that narrowly directed?
Well, it's really a moment in time. Venture capital is actually a relatively new idea, just started about a half a century ago. And a lot of the venture capital started in San Francisco and in New York and in Boston. So some of it relates to that history. And some of it relates to the innovation in the last 2 decades has been mostly around software. The first way the internet companies like mine, AOL, and many others kind of built the on-ramps to get everybody online. And then the second way was really building apps on top of the internet. And that software focus really played to the strengths of Silicon Valley. As we enter what I've called the third wave of the internet, where the internet becomes more integrated in everyday life and changes healthcare and food and agriculture and smart cities, a lot of things we're talking about at this conference, the skill set is different. Partnerships become more important. A lot of the big companies, 75% of the Fortune 500 companies are in the middle of the country, not on the coast. In healthcare, for example, some of the most important, credible institutions like Cleveland Clinic, Mayo Clinic, MD Anderson, Johns Hopkins are not in those major hubs. So there's an opportunity for more innovation to happen in more places in the next couple of decades. But it's going to require us to spread capital more broadly, not just invest in certain places, and also win the talent battle, because in the last half century, there's been a huge brain drain in many parts of the country where people felt like they had to leave where they are to go to one of the coasts, because that's where the money and opportunity was. So how do you create enough opportunity in these places and shift it from essentially 3 cities getting all the capital to 30, 40 cities? And I think that will lead to the rebirth of a lot of these, what some people call second-tier cities, that really can be much more important in the next wave than they were in the past wave.
So that explains to some extent the geographic concentration of where capital goes, but there's also a demographic concentration. I believe only 2% of total American venture capital funding goes to all women startups, 2%. And even lower share goes to African American.
Oh, yeah, less than 1%.
I mean, is there a degree to which it's guys like us who fund guys like us?
Sure, of course. No, essentially investors, venture capital investors, mostly focus on what they call pattern recognition. They say, let's look at what we've invested in, which ones worked out, let's do more of those. And so if what worked out in the last one was backing a dorm room startup of some guy at Harvard or Stanford, like Facebook or Snapchat, let's do more of it. It's actually a kind of a rational strategy as an investor. The unfortunate thing is it misses out on a much broader array of potential entrepreneurs and leaves a lot of people out who don't necessarily have those networks. So the data you mentioned, the 75% going to 3 states, the small amount going to women, small amount going to people of color, basically says, even though it's a great entrepreneurial nation, and certainly I'm proud of it, it does matter where you live, it doesn't matter what you look like, it also kind of matters who you know. If you have an idea, you can scale it, and that's what we're trying to change with Rise of the Rest.
So Rise of the Rest, you are essentially trying to find those opportunities to fund anywhere but these 3, but Boston, the Valley, New York. And you're doing road shows, and you're going to places like Detroit, you're going to middle of America. can I play devil's advocate for a second? If you look at your stellar board, you've got people like Henry Kravis, Jeff Bezos, the Koch Foundation, you've got an extraordinary, Meg Whitman, you've got an extraordinary stellar group of people who benefited from the system as it is. I mean, it's almost a sort of roll call of the plutocracy of America. How have you persuaded them that this is going to change things, and do they really want things to change?
No, they do, and they believe that the puck is moving in a different direction and that their innovation in this third wave will be more regionally dispersed if the capital is there, if the talent is there. So they do believe it as just as a core investment strategy, and also recognize it's one way, not the only way, to deal with what's becoming a much more difficult political challenge in our country, where a lot of people do feel left out and do feel left behind. And the startling thing to me when I started getting involved in this about a decade ago, actually, something President Obama asked me to lead an effort called Startup America, was the role young, high-growth companies, startups, play in terms of job creation. People think of the business sector, the private sector, as a monolithic thing, but really small businesses and big businesses and young, high-growth startup businesses actually are quite different, have very different kind of policy needs. And small businesses account for a lot of jobs, restaurants on Main Street and dry cleaners, et cetera, but actually as a sector don't create net new jobs, because one restaurant goes out of business, it's replaced by a new restaurant, about the same number of jobs. And big companies, Fortune 500 companies, as a sector don't create jobs, because some, like Amazon, are growing, some, like GE, are declining. So as you add it all up, it doesn't drive job growth. So the place to focus is these kind of companies that start small and someday can be big, and you have to figure out ways to back those companies in everywhere, not just in a few places. And the investors we've assembled and the advisors we've assembled really do believe in that, and believe if you are creating more jobs in more places, there will be more opportunity, there will be more hope, there will be less of a brain drain, more people will wake up in the morning being optimistic about the future as opposed to anxious, what's going to happen with AI, what's going to happen with driverless trucks. We know that will result in some job loss. That's not really open for debate. Technology's always done that. Even 200 years ago, over 90% of Americans worked on farms. Now it's less than 2% because technology made it easier to grow more food at lower cost, which is a good thing. Thankfully, we were able to follow that kind of agricultural revolution with the Industrial Revolution, and more recently with the technology revolution. It really ties into the discussion around these we've had so far at this conference. I recognize this is more of a global conference, and the dynamics are different in different countries. But essentially, 200 years ago, we all lived on farms. 100 years ago, we made this transition from farm to factories, led a lot of people to move into cities. 50 years ago, there was a transition for people moving out of cities into suburbs for a whole host of reasons: schools, crime, white flight, whatever, a bunch of different factors. Now we're seeing people move back into cities because there is a creative dynamic there that they want to be part of, both the younger people and also older people. It's becoming that hub. And I think in the next wave, what you'll see people moving out of big cities into medium-sized cities, right, where the quality of life is awesome, the cost of living is terrific, as long as we can create the jobs, create the opportunity in those places, which we can only do if we're backing more companies, doing more things in more places.
So you mentioned, clearly your case is built on second and third tier cities, right, coming back. And I'm glad you mentioned Amazon, because Amazon had this recent, very famous H2Q competition, which is all about moving to one place, or two maybe. Ended up being one, Northern Virginia, Washington, D.C. How do you evaluate, that's clearly a very different bet. They're seeing the puck go in a different direction to where you're seeing it go. How do you evaluate the way Amazon conducted that exercise?
I'd say mixed. As you mentioned earlier, Jeff has been a friend for 30 years, an investor in Rise of Rest, so I say this with some, I have to be careful with what I say, I guess. But I appreciate the fact that they said we need to expand outside of Seattle. I appreciate the fact they said, let's essentially let every city kind of take a shot at this. But the reality is, when they said we're going to pick a city that can handle 50,000 employees, it essentially meant you had to have a certain size, and most of, I think it was 236 cities that applied, never had a chance. And so I think if they had said we're instead going to pick 10 cities for 5,000 people, and they did pick Nashville for 5,000 people, it would have been a different game. I would have preferred if they had a more dispersed strategy, which I think they're actually now looking at doing in terms of not just finding another big hub, but looking to distribute it more broadly. That said, and the earlier panel covered this, I think if the 236 cities that lost, keep the momentum going, keep the collaboration going, and shift the focus from trying to get one company to move employees there to backing the next generation of companies. And if they took half of the money they were putting on the table to lure Amazon, and even half of the energy the community kind of put together to try to win the bid for Amazon and refocus that on their startup community, they might create the next Amazon. So I think it's the opportunity now is for these cities that did, and both, we heard this from Chicago and Newark, they're now actually better at telling their story. They're better in terms of understanding some of the dynamics in their community. If they continue to build on that, what Amazon did, even though the way they it played out was not exactly the way I would have preferred it, will have done a great service to the country, because it could essentially inspire dozens, if not 200 plus cities to focus more on startups and be better positioned for this next third wave.
The traditional American way has been, well, when a way of life or an occupation dies, you move. Or you might just move anyway because you're American. And the farms are a really good example. Most people don't live in rural areas anymore. What's wrong with, again, to play devil's advocate, what's wrong with saying, well, look, Gary, Indiana, or Toledo, Ohio, your industry's died, move.
Well, some of that's going to happen, but how do we then say, because we're going to see some job loss in certain sectors, which are somewhat predictable, how do we back companies in those sectors that can create jobs in the future, kind of industries of the future? This notion that they were strong for a while and things happen, and too bad they're out of the game and everybody should leave is a ridiculous, arrogant, elitist concept. I'll take Detroit as an example. Detroit 100 years ago was essentially Silicon Valley. In this country, it was the most innovative city in the country. People were moving there because they wanted to be part of the car revolution. Roads were being built and schools were being built, et cetera, et cetera. It was rocking and rolling. Detroit was a place to be. And then things changed. Global competition, a bunch of other things, kind of lost their entrepreneurial mojo. Lost in the last half century 60% of their population, and then went bankrupt. So one could say, well, Detroit had its time, is now an irrelevant city. But people said, wait a minute, Detroit has a lot of things going for it in terms of understanding mobility and grit, and a city a lot of people love, and the entrepreneur, Dan Gilbert, working with the mayor and the governor, and foundations like Kresge and others said, let's change that narrative. And now the level of activity in Detroit, we have 4 or 5 investments in Detroit. One of our best performing Rise Rest companies is a company in Detroit that 3 years ago had 4 employees. Now they have 600 employees. Growing like crazy. Actually going to announce soon an investment at $1 billion valuation in a city that most people had given up on. So I don't believe in giving up on these cities. It is hard to create a more kind of fearless, anything is possible culture in communities. It's hard to win this talent game, so you slow the brain drain of people leaving, you create a boomerang of people returning. It's hard to get the venture capitalists locally, angel investors and so forth, and the national coastal investors to pay attention. There's a bunch of challenges. I'm not suggesting otherwise, but we have to make sure we are fighting for these cities. We have to make sure we're creating opportunity in these cities, and it's not just in this country. Obviously, the same dynamic exists all around the world. Otherwise, we're going to have an even more divided country, and otherwise, this country will likely lose the next revolution. America itself is a startup. 250 years ago, it was just an idea. How do we continue to innovate, continue to pioneer? And over those 250 years, we've seen cities rise and fall based on different dynamics. But some of the cities that had risen and then fallen are going to show a remarkable resurgence over the next half century.
Just to be clear, I was playing devil's advocate. 1 minute left, and I want to get quickly your answer to this question. The only sort of significant initiative that the Trump administration has taken on this agenda, the second, third tier cities, are the opportunity zones, which provide tax breaks to people who, now the suspicion is, the people who are availing of these tax breaks, like the Kushner family, the investments they're going to make anyway, they gerrymander the boundaries, make it look qualify. What's your assessment of the Ozone tax break?
I'm a big fan of it. I worked on it 3 or 4 years ago when it was introduced as an Investing in Opportunity Act, broad bipartisan support. So I was a big fan of it. And I went to the White House when it was announced and worked with a number of folks to try to make sure it gets the right policies are put in place, which are now getting clearer. And I do think a lot of capital. There's 8,700 of them. Some may have been picked in a way that isn't ideal. They only had 2 or 3 months to make their selections, but 95% of them really desperately need that investment, and the tax incentive, I think, can be a boost, both in terms of investing in companies in those opportunity zones, or investing in a company willing to move into an opportunity zone, as well as investing in real estate like we see in this neighborhood that can create a better platform for startups to succeed. So we're big fans of that. We're actually going to add a kind of a real estate opportunity zone aspect to what we're doing with Rise of Rest, because we think it's highly synergistic, building the places where entrepreneurs want to move. 50 years ago, if you wanted to revitalize a neighborhood, you got the artists to move in, like Soho in New York. Now you get the entrepreneurs to move in, but they have to have places to live, places to work, places to eat, and that's where I think the opportunity zones can be hugely important. And the mayors obviously play a critical role as well, and that's part of the reason I came here. I just want to make sure everybody who's working on this understands how important startups are, understand how important entrepreneurs are, and become champions for the startup community, and tell the stories of those startups to attract more of the capital, attract more of the talent. The mayors and other public officials play a huge role in terms of strengthening and revitalizing startup communities, and we can have more regional dispersion of innovation. We can create more jobs for more people in more places. We can create pathways for more people to pursue the American dream, but it's not going to happen automatically. It's a lot of hard work, and it requires a collaborative effort.
Well, on that optimistic Hawaiian note, thank you very much, Steve.
Thank you, and thank you all.